Hello everyone, welcome back. This is Jeff Craig from Mysteel's Iron Ore Department, here to give you an update on China's ferrous market. Let's dive in. The focus and narrative surrounding China's ferrous market has shifted to the off-peak season, as the ongoing decline in steel demand continues to exert downward pressure. Despite this past week's National Fiscal Work Conference announcing plans to prioritize increasing the fiscal deficit ratio and issuing government bonds in 2025, market sentiment remains relatively subdued, as expectations of more tangible measures will not materialize until the two sessions in March. Total steel inventories fell for the 12th consecutive week, but witnessed a decelerated destocking pace as downstream demand continues to weaken, especially from the construction sector. In particular, some state-owned enterprise projects have been negatively impacted by year-end financial settlement pressure, and the capital rate in place for domestic construction sites fell slightly, according to latest surveys. In addition, rebar demand has been suppressed due to environmental control measures in certain regions that have led to construction site shutdowns, further compounded by an increase in completed projects. Although apparent consumption of flat steel remains stable, its fundamentals are expected to face increased pressure due to a potential recovery in production, driven by existing profits and the imminent conclusion of maintenance. Both integrated and mini mills have continued to cut production, which has weighed on raw materials demand. Iron ore fundamentals showed slight improvement amid falling portside arrivals and existing winter stockpiling activities, which helped offset some price losses. However, the outlook for iron ore demand has worsened, largely due to ongoing reduced hot metal production, resulting from diminishing downstream demand. Moreover, the fifth round of coke price cuts was implemented last week, with another round potentially scheduled for January. Coke market fundamentals weakened further by rising inventory pressure resulting from stable supply and falling demand. In particular, coke output has remained largely flat, reflecting existing thin margins at coking plants. The ferrous market is likely to experience continued fluctuations with both upward and downward movements. Although downstream demand will face additional weakness, extremely low inventories and resource tightness for certain steel specifications continues to mitigate this pressure. Furthermore, improvements in steel mill profitability are likely to limit additional production cuts in the coming weeks, resulting in ongoing uncertainties in both the steel and raw material markets. That's all for this week's China Ferrous Market Update. Thanks for tuning in.